The Securities and Exchange Commission has formed a cross-border task force within its division of enforcement. Its mandate is to identify and address cross-border fraud that harms U.S. investors. This is a significant development because it marks a shift in how the SEC views global participation in the American markets. This task force reflects a broader change in the regulatory philosophy under this administration. Market access and national interests have always been closely linked, but the resources and priority and attention given to certain issues under various administrations does change and has a huge impact on outcomes. In terms of the context behind this policy, the initiative follows the administration's America First investment policy, and it's essentially designed to emphasize a closer review, more scrutiny of investments tied to strategic competitors, other countries that America competes with, and sensitive industries therein. Yes, foreign companies can still participate in the US markets just like they always have been able to, but the same standards that we apply to domestic issuers need to be enforced abroad, which often requires a little bit more resources, attention, and focus, which this administration is fully backing. The SEC has outlined three main priorities in this regard. First, foreign-based issuers involved in potential market manipulation. That includes pump and dumps and ramp and dump activity. And second, the gatekeepers, so the auditors, underwriters, and advisors who facilitate questionable listings. And third, jurisdictions where state control or, an opaque environment creates a heightened risk for investors. As Chairman Paul Atkins stated, the SEC welcomes foreign participation, but it's not going to tolerate bad actors who hide behind borders. This move also responds to pressure from Congress and state regulators. Lawmakers have voiced concern about audit transparency, disclosure standards, and the influence of foreign governments on listed companies. In response, the SEC is reevaluating its framework for foreign private issuers. Possible reforms include higher trading volume thresholds, home market listing requirements, and stronger disclosure rules. All of it points towards a more level playing field. At least that's the idea, between domestic and foreign issuers. We've seen this before. In the early 2010s, reverse merger listings from China led to accounting failures and investor losses for US shareholders and abroad. Many of those companies bypassed traditional IPO scrutiny, and the result was predictable: widespread fraud and delistings, and today similar risks are reappearing in small cap and SPAC listings. The difference now is not just readiness, but an administrative focus top-down that directly addresses the risks. So the SEC has experience and tools to act before these risks spread. The Cross-Border Task Force will center its efforts on 5 key areas. The first being market manipulation, so accounting and disclosure fraud, audit firms that block PCAOB inspection, broker-dealers with weak AML programs or incomplete SAR filings, and cross-border insider trading detected through analytics. The emphasis is prevention, not post-mortem enforcement. So the goal is early detection and swift containment. And it's important to note that the effort doesn't stop in Washington. FINRA is also reviewing broker-dealers involved in bridging small foreign issuers to the public, and NASDAQ is also tightening its listing criteria. In addition, Hong Kong Securities and Futures Commission is expanding its powers to prosecute insider trading tied to US listed securities. So this is becoming a coordinated international effort to restore confidence in cross-border market activity. The Cross-Border Task Force marks a structural realignment for the SEC. It positions the agency not only as a domestic regulator in this regard, but as a global standard setter for transparency and compliance. Foreign issuers that meet US expectations, accurate audits, clear ownership, credible governance, will continue to benefit from access to American capital. Those that do not will face increasing restrictions or removal, including investigations and enforcement from members of this task force and their jurisdictions. In conclusion, the cross-border task force signals that market integrity is once again at the center of American financial leadership, and we're really going to be at the forefront of enforcing the American standard on the global markets. This is Braeden Anderson. I'm a partner at Gesmer Updegrove. Thanks for watching. Talk to you soon.